The following is a portion of a recent communication from a current subscriber, and he writes, long-term prognosticators I've been listening to on YouTube who express their ideas and analysis with historical context and in consideration of current macroeconomic trends and geopolitical realities seem to me to be predicting end of the long expansive business cycle ending relatively soon, within 12 months, to a recession. Of course, there will likely be an intermittent uptick or two, but long term, the downtrend seems the likely path. As you say, more information is needed. I'd like to either short here or near here or pick up bargains at or near the bottom. Well, I want to make sure that you understand where I'm coming from, and I want to be crystal clear. So let's take a look. All right, to be crystal clear, here is my thesis, and we're looking at the 20-year monthly on the spiders, the SPY, close on Friday 270.47. Let's go through this. The top, the peak was at that point there. We had a correction, a recovery, and then another correction down to this point right near the 50 EMA, and then we've had a rebound up to the 270 level. So correction was above 225, right at about the 50 EMA, and then up to the 270 level. I want to see if this 270 level holds, if we move on up, or if we have another small correction or a test. I think it's going to be a test, but I've been waiting for it for a couple of weeks now and it hasn't come. Regardless, what we're going through right now to me seems a lot more similar to 2015, 2016 than it does to the dot-com crash or the great financial crisis. So looking at this frame here in mid-late 2018 into 2019 looks to me to be more similar to this point here in 2015, 2016 than it does to that there. And then, of course, the dot-com bubble burst at that point there. So if I'm right, if this is more similar to the 2015-2016 timeframe, I think we're going to have a successful test coming up one way or another, and then I think we're going to have another run of about, say, a year or two. I don't think we're going to have any more than that. I think we're just going to get a run of about a year or two. From 2009, we had a multi-year run into 2015. And then off the bottom of, say, 2003, we had a multi-year run all the way up into 2007, 2008. So I'm looking at this to be more similar to 2015, 2016. Let's go take a look at the MAC here. Again, we're at its level here. We had a double top there. If you remember, I was a little concerned about that second top. Now, what I'm concerned about is the fast line has gone through the slow line, and we're still below the slow line. So I want to see that come through as it did here in, say, 2016 into late 2016. I want to see something like that, the bottom, the basing. I want to see that here. Now, there's a possibility this can continue down as it did in 2008 to 2009, or here 2000 all the way to 2003 or so. But that remains to be seen. One of the signs I'm looking at is that we're above the zero line, so we're a lot stronger here on the MACD than we were back here in 2009 or in the 2000 time frame. Looking here also at the histogram, right now it looks like it wants to try to bottom again. To me, that level is much more similar to this level. Here, we've not gone down this far. Now, it did try to base here and failed. And of course, this did base here, but it took a long time to do that. So a lot of that remains to be seen, but so far, it just, to me, looks more similar to 2015, 2016. Price rate of change. Starting to get some sawtoothing down here. We didn't have much sawtoothing here. We did have the sawtoothing at that level there. And we did have the sawtoothing here in 2015, 2016. So I think that's going to continue. I can be proven wrong, but only time will tell. Looking at the RSI, we're down to that level there, more similar to there, perhaps similar to that point, and then we plunged. And down here was a little bit lower, a little bit weaker than we are right now. So hopefully we can continue sideways moving along that 50 line, midline, perhaps maybe strengthen again. We'll have to wait and see on that. Stochastics as well. Looks just more similar to me to this time frame than it does to back here or even back here. Back into or moving on down to the volume. The volume levels are not excessive, similar to me to that time frame there, nowhere near 2008, 2009, and certainly well above the 2000 to 2003 time frame, but that's a long time ago. Here into the Williams, we've gone down to that point there, similar to there. We haven't gone down this far here. Again, time will tell. This was pretty severe as well. I just don't think we're at that severe yet. Let's move on back up here into the price chart. If I'm correct, we skip off the 50 EMA here soon enough, and then we're on our way for a couple of years, which means to me that's no time to short any stocks. I wouldn't do that. I would look for those stocks that have corrected and are at the bottom of their long-term trends. And we've seen several of those. So I would pick up bargains when they appear. Bargains appear in almost every market conditions. So look for those. Don't look to short stocks. To me, that's a losing strategy. There's an upward bias, at least in the indices. So I would say my advice is to stay away from shorting stocks. For me, look for the bargains. Whether I'm correct or not, the bargains will pay out in long term. So stick with those. And for today, that's ChewDog Charts. Thank you.